Hello, dear traders. Geopolitical tensions are heating up. Distressing news is circulating in the media. Reportedly, Russian troops landed in Odessa and Mariupol, and Ukrainian military command posts in Kyiv and Kharkiv were under strikes. Stock markets sank due to such news. The MSCI World Index slid to the lowest level since April 2021. Investors are extremely cautious given the development of events in Ukraine. Stocks are extending losses as well as government bond yields. At the same time, gold, the US dollar and oil soared. The Volatility Index, which is used to gauge the amount of fear on Wall Street, jumped by 55% last week. To this end, it was quite predictable that speculators would eventually dump risky assets, refocusing on safe haven ones. The S&P 500 dropped by 2.23%. The greenback, on the contrary, gained momentum amid geopolitical turbulence, while the euro declined by 0.8%. The US dollar index managed to gain 0.5%, being a safe haven currency. Judging by the curve on the chart, the index is likely to fluctuate in the range of 96.30 and 96.90. Now it's trading at 96.58. Asian stock market also faced a massive sell-off. In the early morning, the Nikkei declined sharply. However, later it entered the consolidation phase, recouping some of its losses. As a result, it added 1.81%. And today, Bank of Japan Governor Haruhiko Kuroda said that the central bank would closely monitor how tensions in Ukraine could affect oil prices, given Japan's heavy reliance on energy imports. The regulator also noted that it would not alter its monetary policy objectives. The dollar-yen pair moved sideways yesterday. On Wednesday, the yen consolidated at the level of 115.07, and today the pair nosedived to 114.64. Currently, it's hovering around the support level of 114.51 and the resistance level of 115.52. However, analysts believe that the price may fall further to the target level of 113.33. Probably the pair will remain in the sideways range until fresh fundamental news appears. After that, it's highly likely to resume a downward movement. Oil prices soared to the new peaks after having reached multi-year highs amid escalating tensions in Ukraine. If the Russia-Ukraine conflict affects global fuel supplies, Australia is ready to tap its oil reserves stored in the United States. The Australian Securities Exchange also moved down today. The Australian stock market fell by 2.99%. There are no signs of its recovery. The AUD USD pair is also rapidly declining within the daily trading range of 0.7171 and 0.7235. Yesterday, the Australian dollar gained 66 pips. The price failed to approach the target level of 0.7291, declining to 0.7227. And now it needs to break through the support level of 0.7173. If this scenario comes true, it may also hit the target level of 0.7065. Now the pair is trading at 0.7181. However, the price continues to fall. And that's all for now. Subscribe to our channel and keep abreast of the latest market news. Feel free to leave your comments and ask your questions. See you soon.